Yo, P.I.T.I.
What? No? Unity? Queen Latifah? No one? Did I just age myself again? Hey everybody, on today's Lending Listicles, we talk about the 4 things that make up your mortgage payment with the acronym P.I.T.I. The P stands for principal, the total amount of money you borrow. Each month you pay a portion of the principal, calculated based on the interest rate and then the term of the loan. This amount shouldn't change over the life of the loan. The first I stands for interest, the fee you pay to borrow the money. The amount of interest you'll pay is based on market conditions when your interest rate is locked and can also be impacted by your credit score and credit history. T stands for taxes, which are based on the property value and can change from year to year. If you'd like, your annual property tax can be divided into 12 payments and paid on your behalf through your monthly mortgage payment. And last but not least, the second I stands for insurance, which protects your property in case of a disaster or an accident. Generally, your insurance payments stay the same over the years, and like taxes, you can have them paid automatically through your mortgage payment. For more lending listicles and questions about the mortgage process, check out the Movement Mortgage blog or contact a Movement Mortgage loan officer near you. U-N-I-T-Y.